Hello, my name is Michael Ribaudo. I am a junior in the AIM program covering domestic consumer staples, and today I will be pitching YETI Holdings Incorporated. YETI's ticker is YETI. YETI has a price target of $85.32, resulting in a 16.22% upside. YETI is an innovative designer, marketer, and distributor of products for the outdoor and recreation industry. Their products include coolers, drinkware, travel bags, buckets, dog bowls, apparel, and various accessories. YETI operates under three business segments: kitchen and housewares manufacturing, 57.59% of fiscal year 20 revenues; hunting, fishing, and camping goods, 40.37%; and multi-type apparel production, 2.04%. The company was founded in 2006 and is headquartered in Austin, Texas. The visual on the right shows some of the various products YETI sells. Moving to the recommendations section. YETI has seen a strong growth in the past year. The growth is highlighted by a 209% increase in net income, 140% growth in operating income, and a 50% growth in DTC net sales in fiscal year 20. YETI is actively entering into the retail market space with retail stores and pop-up shops of their very own. YETI has partnerships with 4,700 independent retailers. YETI is currently reassessing those partnerships and exiting those partnerships that are less profitable. YETI is also experiencing a growth in international sales. It is recommended that YETI be added to the AIM Small Cap Fund with a price target of $85.32, representing a 16.22% upside. Moving to driver 1, e-commerce and DTC growth. YETI has seen a significant increase in DTC growth due to the COVID-19 pandemic. DTC channels have increased 50% in net sales in fiscal year 20. Gross margin for fiscal year 20 increased 560 basis points, which was directly correlated to the success of their DTC channel. YETI sells products in their DTC channel through YETI.com, country and region specific YETI websites, and YETI authorized dealers on the Amazon marketplace. YETI benefits from their DTC channels because it provides brand engagement to customers, builds customer loyalty, and cross-sells, which all lead to the ability for YETI to grow. YETI has also opened 8 new stores throughout the United States with the intention of opening more once the pandemic resides. Driver 2, international expansion. One of YETI's long-term strategies is to expand internationally, and with 96% of revenues deriving from the United States, there is definitely room to expand. Currently, YETI has entered into DTC channels and wholesale channels in Canada, Australia, New Zealand, Hong Kong, China, Singapore, and Europe. By focusing on brand awareness, dealer expansion, and DTC channels, YETI is continuously expanding into international markets. YETI's management acknowledged they would achieve up to 25% of their revenue from international markets in the coming years by focusing on China and Europe due to buying habits in those regions that mirror the United States. Driver 3, quality, innovation, and brand recognition. Due to the quality of their products that appeal to millennials and Gen Z, which make up about 50% of today's global consumers, YETI's quality product, brand recognition, and continued product innovation allow the company to grow beyond its current product offerings. YETI has recently entered into the luggage industry with a product line of premium bags and luggage. The luggage industry is expected to grow at a 4.3% CAGR over the next 5 years, which allows YETI to expand its existing product lines, channels, and markets. Value for YETI, a 5-year DCF model was created, using a terminal growth rate of 1.5% and a WACC of 7.6%. An intrinsic value of $86.82 was reached. A sensitivity analysis of terminal growth rate and WACC of plus or minus 50 basis points ranged from $74.80 to $103.53. Additionally, a PE multiple valuation was calculated using a weighted average peer multiple of 36.2, resulting in a relative value of $90.24. Finally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 17.8, resulting in a relative value of $58.13. By weighing these models 50, 40, 10, a price target of $85.32 was reached, representing a 16.22% upside. YETI does not pay a dividend. Moving on to the risk section. The first risk is YETI competes in a competitive market. The market YETI competes in is highly competitive with low barriers to entry. Private labels and other competitors offer stiff competition to YETI. Other competitors can adapt to customer changes more quickly and sell products for lower prices and devote greater resources to the sale of their products. The second risk is about COVID-19. The continued spread of COVID can extend the economic slowdown. Travel limitations and retail shutdowns would have a negative impact on YETI. This would ultimately lower wholesale revenues resulting from retail stores being closed or having reduced store hours. The pandemic also creates disruption and delay in YETI's supply chain. The third risk is YETI's growth management. YETI's fast growth rate potential, increased competition, or customer habits changing could affect the overall business. YETI must continue to develop and design new and innovative products on a timely basis to continue to grow. If YETI falls short, a competitor may take market share due to the industry's low barrier of entry. Matthew J. Reinches has been president and CEO of YETI since 2015. Prior to that, he served as the VP of the Outdoor Products Reporting segment at Vista Outdoor. He was also VP of Accessories at Alliant Tech Systems. He was also previously Chief Operating Officer of Bushnell Holdings, a portfolio of leading brands in outdoor and recreation products. Paul C. Carbone has been the CFO since 2018. Prior to YETI, he served as the CFO and COO of the Telbots Incorporated from 2017 to 2018. He also served as the SVP and the CFO of Dunkin' from 2012 to 2017. He was the VP of Finance and Strategy for Dunkin' from 2008 to 2012. Thank you for listening to my presentation. YETI is a fast-growing company and will have continued growth through their DTC channel as well as continued international expansion and increased brand recognition. It is recommended that YETI be added to the AIM Small Cap Fund with a price target of $85.32, representing a 16.22% upside. My email is at the bottom of the screen if you have any questions or concerns. Once again, thank you.